I'm going to give you some swing trading tips that you might want to implement when you take your next swing trade. It's Errol with Passion to Profit, and I realized a lot of new swing traders start with swing trading, which is perfectly fine, and I recommend you starting with swing trading if you're just starting out, because swing trading is going to be a lot slower. You still need to do your support and resistance, things like that, do a little bit of fundamental analysis, do your own due diligence in these stocks, so it really attracts a lot of beginners. Here, I made a little PowerPoint. I'm going to quickly go over what a swing trader is. A swing trader is when you buy a stock and sell it the next day. If you're new to the channel or just new to the stock market world in general, I'm going to briefly go over swing trader, day trader, and long-term investor. A swing trader is going to be when you hold a stock over one night. So if I buy today, sell tomorrow, that's a swing trade. If I buy today, sell next week, that's a swing trade. If I buy today, sell next month, that is a swing trade. Now, a day trade is going to be when you buy and sell a stock on the same day. So for anything to count as a day trade, you have to buy and sell in the same day for it to be counted as a day trade. And for the sake of this video, you guys can look up what a cash account versus margin account is. And a long-term investor, this is going to be a little bit more subjective. Some people will count their long-term investments from a year or two. Some people don't count their long-term investments until it's about 5-10 years. So it's really up to you. So long-term investing is going to heavily rely on if the company is going to be good long-term, if the company is still going to be growing, producing revenue, all those kind of things long-term. Let's get right into the swing trading. Right here at the top, you're going to notice that I have no penny stocks. And I'm not saying you can never, ever trade penny stocks. I kind of just have that rule, especially for beginners, because a lot of times beginners like to place a day trade and they like to turn these day trades into swing trades. They may have not wanted to cut their loss. So that's why I'm going to say no swing trading penny stocks. Yes, there's some setups that you can swing some penny stocks. So if you know what you're doing, that's fine. But just for the average beginner, I'm going to say don't swing these penny stocks because these are trash companies. Most people trade these penny stocks for the volatility during the day. Volatility is going to be a day trader's best friend. So that's why it catches a lot of people's attention during the day. But if you really don't know why you're holding it overnight or don't really have reasons to do so, I wouldn't do it. When you're swing trading, what do you want to look for? When you're swing trading, you want to find stocks that are oversold, especially if you're going long on them. You don't really want to be swinging stocks near its highs. The trade needs to make sense. Swing trading stocks that are trending in an uptrend or a horizontal pattern is going to be a lot easier because if the stock goes against you, at least the trend is on your side. Check for any recent news. Check out Benzinga, check out Finviz, check out Yahoo Finance, check out any news source that you'd like. Even the Thinkorswim platform has a little news tab off to the right that you can check out. But you want to be aware of any news that the stock is releasing. Indicators that help with confirmation, in my opinion, when I'm swing trading, I would like to use the RSI, the relative strength index, the SMA line, the simple moving average of 9, and the 200. And the two time frames that I like to look at is the 180-day 4-hour and the 20-day 1-hour. I know I went over these pretty quick, but in these next slides, some of your questions will be answered. Now, this is AMD just a couple of days ago, and it's trending in that horizontal pattern. I was swing trading AMD a while ago, and this pattern was really easy to pick up on if you're swing trading. It was just trading in the same exact channel. And down here, you can notice that I have my RSI and that I have these arrows pointing at the top and the bottoms of the RSI. And that's what I want to talk about right now. In this previous slide, you can see that I already talked about you want to trade things that are in an uptrend or a horizontal pattern. This one happened to be trading in a horizontal pattern, then to a breakout. But what I want to show with the RSI on this one, when it pushes up or above 70, that means the stock is overbought. The stock is a little bit overextended. It's overbought. Does it have to turn around at those levels? No, it doesn't have to, but it gives a really good indication when the stock has potential to reverse at that area. So if I'm placing any type of trades and I'm going long, I want to find when the stock is oversold, just like in the first slide, what we talked about. I want to find where's the stock oversold at, and I can use this RSI as a guideline. You can see right here when the trend dips all the way to at or below 30 RSI, it's oversold, and then it crosses my SMA line, makes higher highs, trends back up to the next resistance area, gets rejected, dips beneath that line again, pushes back, gets rejected at the same exact spot, gets rejected, pushes down, gets rejected, pushes down, gets rejected, finally pushes back down all the way to that last support that we had it bounce off of. Now consolidates, pushes up, gets rejected at the same exact spot it did 4 times previously, even more if you go back here, obviously creating this horizontal pattern. Again, you can use the RSI to determine whenever things are getting a little overbought and then when things are getting a little oversold. Now, AMD obviously had a nice breakout here, and right now they actually beat earnings and they're at about $74, which I'll show here in a little bit. This is just a screenshot from the chart a couple days ago. What I want to point out now is I've been on the 180-day chart, and now that I zoom in, if I wanted to trade this trend, that SMA line is going to help me and guide me a little bit. If I'm going long on the stock, I may not want to enter a position if it's still trending beneath my moving average. It gives me a lot more confidence and confirmation overall when these candlesticks on the 180-day 4-hour chart start opening above my moving averages. These are also lower risk trades. Buying too high when it's overbought, you're risking too much to the downside. And if you're buying near the support, still waiting for confirmation, you're risking less, because you know if it breaks this and starts making lower lows, you're wrong and you can cut it immediately, a super tight risk level. But you know if it starts trending your direction, it has potential to trend up to the next resistance level. You want to always make sure you're implementing that risk to reward ratio and position sizing when it comes down to the fundamentals. I'm just giving more of a perspective on the technical analysis side of things. Now, ABUS is going to be a lot different. This is a penny stock. This is a small cap stock. These are a lot more volatile than those larger price stocks, but that's why a lot of people trade them, because again, volatility is a day trader's best friend. One thing I will say, if you don't understand support and resistance, how volume really works, that I wouldn't really recommend starting with penny stocks. I know it's attractive for a lot of people because of the price range, but you do have to understand the risk involved, and you have to understand that the volatility in these type of stocks are going to be a lot higher. The one thing I did just want to point out real quick, this isn't really much about a swing trade. This is more of a day trade. ABUS actually spiked a lot from the prior day, and then it's gapping up as well, so it is pretty overextended already. One thing I see a lot of people forget to do, especially as a beginner, is make sure you put in your key levels. Put in your pre-market support, put in your pre-market resistance. Why is that important? Those key areas in the pre-market may be a deciding factor during the day. So if we get a push, obviously it got rejected around $9. It's not too much of a coincidence we had a pre-market resistance at $9. Also, that is a whole number that can act as a mental resistance for a lot of people. As it gets rejected at $9, a lot of longs are chasing into this first minute. I'm on the 5-day 5-minute chart right now, but even with the 1 minute on, you can tell a lot of people are chasing into the open. After it gets rejected at $9 and sells off, it now comes down to the pre-market support, bounces, hesitates a little bit, consolidates for a few minutes, breaks it, and then flushes beneath. Just by you knowing your key levels from the pre-market, you can determine when the market opens where on the chart there's going to be a lot of decisions being made. It doesn't mean it always has to get rejected here at the pre-market resistance and flush downwards. It doesn't always mean it has to bounce here and then keep going. But at least you know the key areas on the chart where decisions are about to be made. But the same concepts can really be applied to when you're swing trading. Put in your key levels, because those key levels are going to be where decisions are going to be made. Key takeaways of this video is going to be that the RSI, the relative strength index, which you can add on this platform, TD Ameritrade Thinkorswim, you can really use that to your advantage to give you a better look from a macro perspective of the chart, especially when you use a bigger time frame. And before we end the video, make sure you're looking at more than one time frame. Check multiple time frames. See if certain setups that you can see on the graph are matching other time frames as well, because most of the time, if they are, the trade might work out even more in your favor. I think I may have skipped over this. Make sure you measure the margin for profit loss. Make sure you measure the margin for profit loss. That's what I was talking about, buying near the support, so you're taking less risk with a higher potential reward. You never want to take more risk with a lower potential reward. Right now, I'm pulling up the 180-day 4-hour chart for AMD, and you can see, like we mentioned previously, it broke out, spiking to new levels. Right now, it actually beat earnings, so it's spiking around 74.66 right now after hours. So if you're swinging that, congratulations. I will say getting in things before earnings is a little risky. If it works in your favor, fine, but I do want people to understand it isn't going to be the best strategy to try and get in things before earnings, because sometimes things can have great earnings, beat earnings, and still dump the next day. That's just one thing I want to throw out there. Don't predict, react. Whatever the market throws at you, don't be in a hurry to react off of emotion. Take the information that you're receiving, be rational about it, and then make the best decision after that. When people get in trouble in the market, it's really when they're acting off of emotion, because in the moment, when you're feeling all these emotions, sometimes your judgment can get clouded to cause you to make an irrational decision. It's the same thing when you get in an argument with someone and they're mad, you or they might say something they didn't really mean. That's actually the same type of concept that's in the market. Something happens, you're feeling some type of void right now, and then you act on it, when really you shouldn't be acting on anything when you're acting out of emotion. If you want to join this Discord chat to a little over 13,000 members, be sure to click the first link in the description. It's going to take you to a little link that you're going to have to enter your email in, and it will be sent straight through email. This Discord chat is completely free. Again, if you're a complete beginner to the channel and you haven't watched this crash course #1 video, Start Trading, that's going to be under the crash course playlist on my channel. Make sure you watch the first one, watch the second one, then watch the third one. We have a lot of tabs in here with definition, intro to options. I don't personally trade options, but if that's your thing, this may help you as well. General discussion. We talk in here during the day when we're trading. We also talk about every stock that's in play before market open. One last thing I wanted to add before I end the video is, if you don't like Thinkorswim charts, or you don't have Thinkorswim or can't get it, one platform I highly recommend is TradingView.com. Go there, sign up for an account. It takes like 2 seconds. You can enter in any stock you want. It gives a lot of time frames, really useful platform. If you have the premium version, it gives you access to so many different types of tools. The free version gives you a decent amount as well, and it works just fine. But if you do want to think about that premium version, it gives you a lot, like paper trading, a stock screener, anything you want, create alerts, customize these charts however you want as well. I really like using TradingView. I've been using it a lot to break charts down recently. So if you're interested in TradingView, you need some good charts to look at. Click the second link in my description, take a look, and that's something you might really like. I'm gonna end the video here. I hope you learned something new. Make sure you're creating good habits when you're trading. Track your trades, know what you're doing well, know what you're doing bad, cut what you're doing bad, and double down on what you're doing well. If you got any value out of this video or learned something new, make sure you hit that like button, drop a comment down below if you have any extra questions, and I'll catch you guys in the next video.